Alright, Chapter 121, Truth in Lending Act. Regulation Z of the Federal Reserve is also known as the Truth in Lending Act. The intent with the Regulation Z is to let potential borrower with a real estate mortgage along with the other consumer credit transaction know how the true cost of the credit. This is expressed the annual percentage rate, which must be disclosed in writing in the credit transaction. Determined with the annual percentage rate is complicated with a complicated formula that results in true the interest rate with the time value of the money calculation. See Chapter 15. Credit must provide additional disclosure in writing, including the amount financing charge of potential mortgage penalty payment mortgage penalty payment that must be disclosed. These fees may be provided with the disclosure statements borrowed. Regulation Z does not does not limit the amount that can be charged, only to provide the disclosure with the consumer. Regulation Z apply for the business, often credit with the share of the consumer. The regulation transaction required with more than 4 payments after the credit with the personal, family, household purposes. The regulation Z does not apply with the business loans. Penalties against creditors failing to make disclosure of the actual damages twice, financing charge, attorney fee, and court costs. Annual percentage rate must be stated in adjusting for consumer loans. Lenders convicted of the criminal action willfully disobeying Regulation Z, they will maybe fined up to $5,000, spent in prison up to a year. After borrower has agreed the credit transaction, he or she has 3 business days to resign. Cancel with the transaction. However, there is no right to resign. The real estate loan has agreed to purchase the sale of the contract for the property. In this chapter, content disclosure includes extensive technical matter for the creditor, although the other only highlights are asked on the real estate exam. The main disclosure asked on the real estate exam include identify with the creditor, amount finance, itemization, amount finance charge, annual percentage rate, payment schedule, amounts, number, total payments, and prepayment privileged properties. Regulation Z of the Federal Reserve, known as the Truth in Lending Act, became effective on July 1st, 1969. Amendments was established on April 1st, 1981, because of mandatory April 1st, 1982, with the provisions after affecting credit transaction and real estate are emphasized here. The Act covers the other type of credits. The purpose of the Regulation Z is to let borrowers consumer know the prevailing cost of the credit so that they compare the costs among various credit sources, thus avoid the uninformed use of credit. Regulation Z also regulates issuance of the credit card, sets of the maximum limits of the unauthorized use. In addition, it provides procedure for resolving billing errors that occur in open-ended credit accounts. Regulation Z does not set maximum or minimum interest rate requiring any charged credit coverage. Generally, Regulation Z applies to individual businesses that offer the extended credit with 4 conditions are met. The credit is offered and extended to the consumer. Offering an extension of credit is done regularly. See the definition of credit below. The credit is subject to financing charge or payable to the person with a written agreement if it is more than 4 installments. 4. The credit is primarily personal and family household purpose. Definition of the creditor. Creditors of those who must comply with the regulations. The creditor is defined with the purpose of as a person who arranges extends credit more than 25 times a year or more than 5 times in a year in case the transaction is secured by a dwelling. Term credit does not include the person who arranges selling, financing, dwelling, real property. However, the real estate property broker may credit the following situation. Broker acts loan broker arranges someone other than the seller to extend the credit provided by the extender of the credit person to whom obligation is initially payable that does not meet creditor's definition. Broker sends credit provided by the broker otherwise meets for the creditor definition. Penalties for violation of Regulation Z. Lender who fails to make disclosure required of the Truth in Lending Act may be issued actual damages just twice as much of the financing charge as well as the court costs and attorney fee. The financing charge portion damage to subject minimum of $100, maximum of $1,000. If lender is convicted with the criminal action, willful and knowingly disobey the act or a regulation, they may be fined up to $5,000 in prison up to 1 year or both. Exempt transaction. Following transactions are exempt of the Truth in Lending Act. Business, commercial, agricultural, organizational credit, extension of the credit other than natural person, including credit of the government agencies, credits over $25,000 not secured by the real property or dwelling, extension credit that involve the public utilities for the security of the commodities accounts and home fuel ban budget plans. Annual percentage rate is Regulation Z 10 printed page. They define an annual percentage rate. Briefing summarization. Annual percentage rate means true interest rate charged with the use of money. Annual percentage rate must be disclosed in prospective buyers. A finance charge. Definition of finance charge is the cost of the consumer credit with the dollar amount includes any charge payable directly, indirectly with the consumer, imposed directly, indirectly by the creditor as part of the condition of the extension of the credit does not include any of the charge of the tax payable, the comparable to cash transaction. Examples. 1. Interest time price differential by any amount payable to under add-on and discount system additional charges for the transaction service activity and carrying charges included in any charge imposed on checking or other transaction account to the extent of the charge exceed the charge for similar amount without credit feature points, loan fees, assumption fees, finder's fees, similar charges, appraisal, investigation, credit report fees, premiums, other credit charges of the guarantee insurance that protects the creditor assigning against customer default or other credit loss charges imposed the creditor by another person purchasing, accepting consumer obligation. Consumer is required to pay charges in addition to paying the obligation deduction precedes obligation. 7. The premium, other charges, credit, life, accident, health, loss, income, insurance, rent, and connection, credential, credit transaction premiums other than charges, insurance against loss or damaged property, against liability, assuring the ownership of the use of the property rate in connection with the credit transaction, discount purpose, inducing payment by means other than the use of credit. Following charges are not finance charges. Application fees show over the application of credit whether or not the credit is actually extended. Charges for unanticipated late repayment exceeding credit limit or for the delinquency, default, similar occurrence. 3. Charges impose financial institution pay items overdrawn in an account unless the payment of such items imposition charge were previously agreed upon. Writing fees charged with the participation credit plan, whether assumed, assessed on an annual or other periodic basis. Other points, interest forfeited as a result of the interest production required by the laws of the time deposit, either security with extension credit. 7. The following fees are in transactions secured by real property, residential mortgage transaction fees are bona fide and reasonable amount. For fees of the title examination, abstract title, title insurance, properties of survey, similar purpose of fees for the preparing deeds, mortgages, reconveyance, settlements, similar documents, notaries, appraisals, credit report fees, amounts required to paid into escrow trustees account, and for the amounts would not otherwise include the finance charge discount. Discussion offered including payment of the purchase by cash, check, or certain other means, premiums, a certain type of insurance also executable if certain conditions are met and certain taxes are prescribed by law for excludable. Recessions. Right of resigned, cancel transactions called a recession. Most lending contracts have a 3-day right with a recession period. Otherwise, any time during the first 3 business days after the transaction is agreed, the borrower can decide to cancel the transaction without penalty. With the practice made, lenders may not advance funds within up to 3 days before or after the expired. Other significant exemption rights of rescission concerning real estate loans are the part of the contract sale representing, selling, financing that is agreed on the sales contract. To resign, a credit transaction bearer may notify the creditor on rescission, mail, telegram, other written means of the communication. Generally, the right to resign expires at midnight on the 3rd business day of the day of the following loan transaction delivered by the creditor. Notice to right to resign, delivery of all material discussed, whichever occurs last. Effective rescission. Consumer who exercises the right to resign is now liable for financing other charges and security interest becomes void upon rescission. Within 20 days after the receipt of the notice of recession, credit will return the consumer money and property given earnest money, down payment they otherwise should take the action necessary to appropriate to reflect to terminate any security interest created under the transaction. If the creditor has delivered money and property to the consumer may retain possession until the performance of the credit obligation under this section. The consumer shall tender property creditor except for the return of the property in the kind which would be impractical and inequitable. The consumer shall tender and responsible value of tender of property should be made with the location of property or the residence of the consumer. Option of the consumer tender money shall be credited or place of the business, and the creditor does not take possession of the property within 20 days after the tender by the consumer. Ownership of the property vests the consumer without obligation on the part of the pay for it. Our residential mortgage transaction 5 parts of regulations Z provide with a different treatment of residential mortgage compared with the type of the credits. These are follows. Certain fee for the connection with the residential mortgage can be excluded with the finance charge of these fees of the title examination, title insurance, the title track, survey, preparing deeds, mortgage documents, notary appraisal, credit report, amounts paid in escrow, and come out. Yeah, mama.
Come take the garbage out.
Alright. Residential mortgage transaction creditor must include a statement as well as the subsequent purchase of the dwelling may assume the right of obligation with the original terms. Time of disclosure under Regulation Z residential mortgage transaction cover the Real Estate Settlement Procedure Act coincides with the Real Estate Settlement Procedure Act requirements. When mortgage loan is assumed, the creditor must make look at the intention of the party, assuming they determine the required disclosure of the parties will use the property as principal dwelling. Disclosure applicable such are necessary even if the original borrower did not use the property for that purpose. The transaction constructed with the quiet of the principal dwelling and not eligible for the right of recession. Lien status, first or junior mortgage does not matter. However, a transaction separate for the purchase such as improve the residency covered with the right of transit is recession. Alright, content of the disclosure. Following the disclosure requirements are closed-end loans. Most real estate agent estate mortgages are considered closed-end because they are non-susceptible credit advance for each transaction. Creditor should disclose the following information applicable to the creditor. Identify the creditor making the decision. Amount finance. You determine the brief description such as the amount credited provided to you or on the behalf. The amount finance is calculated by determining the principal loan amount with a cash price, subtracting any down payment, adding into other amounts financed creditor are not part of the finance sheet, and subtracting paid finance charge. Itemized amount finance, separation rate and itemization amount finance, good faith estimate, settlement cost of the transaction, some of the Real Estate Settlement Procedures Acts are acceptable to substitute the items include the amount distributed directly to the consumer, the amount credited with the consumer account with the creditor, the amounts of party paid by other person creditor with the consumer behalf. The creditor shall identify with the purpose person. Generic names, general terms are acceptable for the certain person, for the public official, for the credit reporting agencies, appraiser, insurance companies, prepared finance charges. The creditor does need not to comply with the paragraph 3A above. The creditor provided with this statement with the consumer the right to receive the written itemization over the amount financed together with the space the consumer indicated whether it's desired. Consumer does not request it. Finance charge. The finance charge you determine the brief description such as the amount of the credit will cost you. The annual percentage rate. You've determined a brief description cost of your credit as yearly rate, variable rate, annual percentage rate. Increase the consumption of the following disclosure must be included circumstances on which the rate may increase. Any limitation increase the effect of the increase. Example, the payment terms that would result from increased payment schedule, the number, amount, the timing, payments scheduled to repay the obligation, and demand obligations with no alternative to maturity due. Creditor may comply with the paragraph disclosing the dates and payment periods and schedule interest payments for the first year. Transaction series payments varies between financial charge applied with unpaid principal balance. Creditor must comply with the paragraph discussing the following information. 1. The dollar amounts, largest, smallest payments in series. The reference of the variation, other payments in series. Total payments of the using term, the descriptive explanatory, the amount that you will have paid when you have made the scheduled payment, demanding future obligation demand feature, the fact that disclosure based on assumed maturity of 1 year, the fact that it shall also disclose the total size of the price of the credit, sale of the total sales price, that using the term in a descriptive explanation, include the amount with any down payment such as the total price for the purchase of the credit, include the down payment of blank, the total sales price, sum of the cash price for the items described in paragraph 2B, and the finance charge discussed in paragraph 4 above. Prepayment, when obligation includes a finance charge computed with the time-to-time application rate with unpaid principal base balance statement indicating whether or not the penalty may be imposed with the obligation prepared in full. When the obligation includes financing charge other than financing charge described in paragraph 11A, statement indicating whether or not the consumer is entitled to the rebate, any finance charge, the obligation prepared in full. 12. The late payment, any dollar percentage of the charge that may impose with the maturity of the date of late payment other than the deferral and extension charge. Security interest, the fact that the creditor will acquire the security interest in the property purchase for the part of the transaction of the party and property identified within the item of the or type. Insurance of the item requires the lay in order to exclude with a certain insurance premium and financial charges, certain security interest charge of the disclosure required by the law in order to exclude the finance charge, certain fees prescribed by the law, and certain premium insurance in lieu of the perfecting security interest. 416. Contract reference, a statement the consumer should refer to the appropriate contract document information about non-payment of default with the right to accelerate maturity of the obligation of prepayment of rebates and penalties. Creditor's option statement that must include with the reference contract further information about security interest, residential mortgage transaction, about the creditor's policy regarding assumption of the obligation. 17. Assumption policy, residential mortgage transaction statement of whether or not the subsequent purchase of the dwelling of the consumer may be permitted to assume or meaning obligation, original terms required, deposit deposit of the creditor required the consumer to maintain a deposit of the condition of special transaction statement annual percentage rate does not reflect the effect of the required deposit. Disclosure of certain residential mortgage transaction time. Disclosure of residential mortgage transactions over the Real Estate Settlement Procedure Act for the creditor. The creditor shall make good faith estimates of the disclosure described above the consumption and shall deliver with the place of the mail no later than 3 business days after the creditor receives the consumer written application, which is earlier. Read disclosure if the annual percentage rate of the consummated transaction varies. If the annual percentage rate disclosed is more than 1/8%, 1% point is regular transaction, more than 1/4 to 1% point is a regular transaction. Creditor should disclose the charge change terms no later than the consumption settlement. Subsequent disclosure requirements, refinancing, cover the existing obligation subject to the part receive if the satisfied with the replace the new obligation undertaken, same consumer. Refinancing new transaction, cover the new disclosure to the customer. The new financing charges include the unearned portion of the old finance charge of the now credited with the existing obligation following should now be treated with the refinancing. A renewal of single payment obligation with no charge of the original terms to be with the reduction annual percentage rate with the corresponding charge of the payment schedule. C, the arrangement. An agreement involving the court proceedings. D, and a change in payment schedule, the change of the collateral requirements and result of the consumer default of the delinquency unless rate is increased with the new amount of the finance exceeded the unpaid balance plus the unearned finance charge, premium, the continuation insurance and certain types, renewal of the optional insurance purchased by the consumer added in with the existing transaction if the disclosure relating to the initial purchase will be provided with required by the subpart. Assumption of the assumption curve that the creditor agrees in writing with the subsequent consumer to act except with the consumer with the primary obligor and existing residential mortgage transaction. For assumption the curve of the creditor shall make with a new disclosed subsequent consumer the base on the remaining obligation finance charge originally imposed with the existing obligation was add-on and a discount finance charge. Creditor need not only be disclosed the unpaid obligation assumed the total charges imposed of the creditor in connection with the assumption. Information required of disclosure under Section 22618 K, L, M, and N and Regulation Z. Annual percentage rate originally imposed with the obligation payment schedule under Section 22618 G. Total payments under Section 22618 H or remaining obligation. And that was Chapter 21. Chapter 22, Subdividing, Building, Development, Land Use Control, Environmental Matters.